We're delighted right now to be joined by Michael Pokrassa, Managing Director with Raymond James. Mike, thanks so much for joining us.
Thank you. Pleasure to be here.
Tell us what you do with Raymond James.
Sure. So I'm a managing director in a group within investment banking called Restructuring Investment Banking. We focus primarily on company side advisory assignments for companies in distress. We also do some private debt placement as well, so it's kind of a counter-cyclical side to our business. But we've been in the industry for probably since 2002, since we really prospered. We've done over 150 distressed transactions. I've been here for about 7 years. Prior to that was at a hedge fund, Silver Point Capital, also dealing with distress, more on the buy side. And prior to that, spent 6 or 7 years at FTI and PwC doing restructuring consulting. So all in all, been in the restructuring industry for probably 15 years or so.
So you've seen a lot in your history, and there's going to be a lot going on in your future. So if we look forward to the rest of 2016 into 2017, what opportunities do you see for distressed investors?
Mm-hmm. Sure. I think really, now that we're in the start of 2016, the equity markets, or really public markets, have done extremely, have been anemic for the first month or so. The equity market hasn't really performed. The bond market hasn't, any new issuances. Same thing with the loan market and the convert market. So really, I think that's going to drive investors to seek other opportunities. And in my mind, at least, there's really two areas people are going to focus. One is really just on direct lending into the middle market, which is what we focus on. So public markets aren't available. Companies still seeking capital. We help them raise capital by basically going out and selling the story where you can't go it and do it in the public markets. So I think that's going to be an area of focus, and there's a lot of capital being put to use in that sector, if you will. The other side of things, I think, is just overall we're seeing leverage levels in the market pretty much at where they were pre-recession or lead up to the recession, and I think that's going to have a factor here in the coming months and year.
Well, the buzz for quite a while now has, of course, been energy.
Mm-hmm.
Is that sector still a place worth investing in, or do you see that?
Yeah, timing is everything there for sure. But we're, like most restructuring folks, spending a lot of time down in Texas. We have Raymond James is a huge energy practice. So we did probably 10, 15 deals, our restructuring group with the energy folks back in 2008, 2009. So certainly familiar with it. I think this go around last year was. There was a lot of opportunity in the first half of last year for new money to be put in, and I think in the second half of the year was more about exchanges, restructurings, and we're really seeing that continuing in 2016, and that's going to provide a lot of opportunity for investment. I think timing, again, is kind of going to be critical, and how long do people really have to wait it out? And I think private equity money sat on the sidelines a little bit last year, and I think they had a lot of money earmarked for energy, and now they're, I think, going to be able to pounce on that. And some of the distressed funds, I think that they this go around, I think they have more strategic angles, and I think they'll be able to be more competitive. But certainly, like everyone's focused on energy, as are we, and expect to be down in Texas eating a lot of barbecue. So.
How about healthcare and retail?
Healthcare and retail for sure. Also, I think everyone's sort of focused on those as the prime suspects for the year. I think we have done a lot in both those spaces. Particularly I've done a bunch recently in the healthcare space, and I think it's a tough industry where it's a lot of it's formula based, and if government decides to reduce reimbursement rates, it's not great for business, and it's tough to recover from certain things in the sector.
What industries appear more favorable for acquiring in the market?
I think for me, going back to energy and oil and gas and the services side of things, to the extent folks can be more vertically integrated, I think that's going to allow companies to be more nimble. And when prices do come back, given we're in kind of a roughly supply-demand equilibrium, but pricing presumably isn't economic right now, I think it will come back. Question is when, and are people going to be able to capitalize on it on a timely basis? And so I think to the extent folks are more vertically integrated, they'll have more chances and abilities to hit the market at the right timing.
You have a lot of traction in this industry. You've been doing this for a long time. What has
I don't
really
have that much gray hair.
No,
Just a couple pieces.
For 21, you've really started early. But what would you say, what changes have you seen as a result of dynamics in the economy?
I think overall people are more accountable for one. I think, funds, back before here I was at a fund, and it was kind of rules were changing, every quarter, every year. I think folks just have to be more accountable for what they're doing, and, there's systems in place to deal with that now. And really, I think, it's less of the Wild West and more, people very diligent and focused on, here's the real upside, here's the real downside, and set forth, here's our cases, and we're willing to take the risks, for better or worse.
Well, Mike, thank you so much for joining us today
Yeah,
on M&A TV.
pleasure.
Good to have
Thank
you.
you.